Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, May 4th, 2009. Well, we're seeing another update on Wall Street, and this is becoming very commonplace. We'll look at the charts today, but there are a couple things we need to watch for this afternoon, but I want to discuss a little bit about what we're seeing going on in the intraday analysis video today. Key trend lines, key technical analysis, key psychology even. Psychology is an underrated portion of the market that I think too many people overlook, and you guys know we're really focused on knowing the psychology of the markets, going the contrarian view when it's appropriate. Now, what you are seeing, folks, is we opened up higher on the day, and you can see my chart right here. This is the current day based on the 10-minute SPY chart. Here's Friday, here's Thursday. Now, I do have a key trend line we have in here, and I want to go back and show you where I got this because it happened to be the perfect top of this market. If you go back in your chart all the way back to the 22nd of April here, and you take that high print, see that high point right here on the 22nd, and you connect it all the way to the high on the 24th, and then again, and this is amazing. This is why I love trend lines, folks. If you connect it to the highs on the 30th, and then again, look at where it comes to be. So you can see this trend. This is an upper level trend line that's being very, very accurate in the ways of keeping the market from breaking higher. Every time it hits that area, it's a sell-off. You can see it hit it once today, sold off, retested, and then sold off. Now you actually have an in spirit of bearish flag pattern developing here, and you're now seeing a little bit of selling coming in. Now you still have support at this 20 moving average. Very, very light volume today, folks. And I happen to be talking a lot. I talked over the weekend in the weekend analysis video a lot about how the light volume can affect the market trading and how it's very easy for the market to hold up. Based on psychology, the market generally will go higher when there's light volume because it's inherent, or it just in general, it's human nature to be positive. So if in human nature is positive in general and you don't have really anything affecting the markets, you will continue to float up on light volume. That's exactly what we're continuing to see. Really, it's been the last couple of weeks that we've seen this, and it's very much so kept the markets floating higher. Now, eventually we will get volume back in. The stress test is going to be released, or the data from the stress test will be released on Thursday. That's going to come into play. But right now, you have to really be careful because while this is a bearish flag pattern in spirit of bear flag right here, you just have to be a little cautious because very easily they can whip this market. And I want to show you a good example of that. See this pullback after the first hit of the blue line? You have a nice little tail there and a 1, 2, 3 pullback. And notice how 3 candles basically equal this much size, basically from the high here to the high here. Then on the next candle in this light volume environment, a buy program comes up and you take out the highs and blast right through that. So that's why it's very, very nerve-wracking to be a trader in this market, because the light volume, especially the upside if you're trying to short the market, can be very, very treacherous. Now, what we saw here is 1, 2, 3, 4, 5, 6, 7, 8, 9, so forth, so many red candles, and then all of a sudden this one, pushed up, basically taking out 3 or 4 of them, and between these 2 green candles, you took out about 4 red candles in that situation. But you can see again the market coming in here. This isn't still an in spirit of bear flag pattern. We'll have to see if it plays out. You can see how you're hovering at the 20 moving average. If this 20 moving average breaks, most likely you're going to go down and test this level would be number 1, and after that the green trend line right below that as number 2. Okay, so watch that very closely on your data market right now. Okay, so again, notice the selling coming in here, folks. I want to just talk a little bit about what the market's doing today. We have the Dow up about 150 points or so, 151 points to be exact. The NASDAQ higher by 25.5, and the S&P up about 17.4, basically 1.5 to 2% across the board right now. And that is off the highs. As you can see, the highs were made up here. You had a little double top pattern, now a little bearish pattern developing as well. But nonetheless, it's been an impressive day, folks. I mean, any way you cut it, they've kept this market floating again. I personally think it's somewhat of a little bit of a joke here how they pushed off the stress test perfectly. And again, I have to give the government credit and the Treasury and the Federal Reserve credit how they pushed this off so smartly, because if they had the stress test out today, you'd have huge volume in this market, and really the rest of the week would be heavy volume. I mean, you have unemployment numbers on Thursday, and in between, Tuesday, Wednesday, Thursdays are the biggest volume days anyway, so you're going to have volume. By pushing the stress test off, they keep Monday light, Tuesday, Wednesday light ahead of those numbers. Thursday, you're going to have the unemployment rate out anyways. Might as well throw the whole kit and caboodle away in this whole thing to get the volume. Whatever the market's going to do there, it's going to do, and then Friday, you start that light volume pre-weekend type environment again. So very, very smart. You got to give them credit. Very, very ingenious of them as they maneuvered the way and pushed this away to keep the volume light, keep the market floating up this portion of the week. So again, as much as the market may be near-term overbought, you can't go against it right now as much because of this whole light volume factor, and they can very much push this market back to the highs or back to this upper blue trend line. And I want to make that clear. Could the market fall? Should it fall? Yes, absolutely. In the afternoon session, we're still overbought on this up move. Could it fall down to this level, which is right around, let's get a quote on that here, right around 89.35? Absolutely. Could they take it back to 89, which was the previous high going back to last Thursday? Absolutely. But when you have the light volume factor in here, it makes it a very tough scenario. Now, again, notice the volume, very, very light today. Only 137 million traded on the spiders at this point. We just crossed 1 million on the futures volume contracts here, and that again tells you that there's very light volume out there. Very easy for a Goldman Sachs buy program to come in and just push the market up very easily on the computerized buy program side of things. Okay, and we can take a little look at Goldman here. Goldman actually it is doing well. It had a nice pullback with the market. Now it's starting to move up. If Goldman's moving up, and generally you will see the market move higher because Goldman is such a big component of this market. In addition, ExxonMobil is worth watching. Exxon is off the highs, but still positive on the day, up about 16 cents. But really what you're watching for, folks, what's leading the market today is the commodities again. Financials are definitely leading. Wells Fargo is having a very nice day, even though word is out that they need an extra, they have to raise more capital according to the Treasury and the Federal Reserve, that they're going to have to shore up their balance sheet. But nonetheless, Wells Fargo, Goldman Sachs, a lot of them are up anyways, but it's commodities again. The commodity stocks are just getting the ultimate squeeze, kind of like what we saw in the financials 2, 3, 4 weeks ago. Now is happening to all the commodities. The question is, where does it go after that? And that's really what the big thing will be, and that's what we're going to discuss in our nightly video tonight. What will be the signal then? What's the next thing that they can squeeze that will cause the market to go up? Is there anything? If so, what would it be? Where would it take us? And where's the next major resistance points to look for possible shorts in this market? Okay, so we'll continue to watch for that and think about it and analyze it in tonight's videos. Also, come and join the Research Center with many, many other services to offer. In addition, Saturday we have our webinar series, our methodology webinar. You can check that out at inthemoneystocks.com, as well as the intraday stock chat, always a favorite by our traders out there that love to watch our charts as we discuss and analyze the markets all throughout the intraday period. Okay, so again, keep an eye on these patterns. ExxonMobil, somewhat of in spirit of bear flag. Goldman Sachs is getting a little steep to be that bearish flag pattern now, but we'll still continue to watch it. Maybe it can pull back a little on this candle. And last but not least, of course, let's go back to the spiders here and talk about our levels. And you can see kind of still that bearish pattern, still a little steeper than you usually like to see it, but really why? Because it's holding on to this 20 moving average sloping up. Now, again, if we go up, you're going to look for this blue line to be retested. Wherever it may be at that point, that'll be a significant amount of resistance. Again, as it goes throughout the day, it's creeping up and up and up. Should we start to fall here, and we're going to have to see what this candle does, you're again looking for this 89.35 level, 89, and then after that, wherever the 50 moving average is, which is now continuing to slope up, I'd expect it somewhere up in this range, coming up towards that green line for the rest of the day, maybe even meeting that green line by later today. So keep an eye on that as well. But nonetheless, again, a light volume, controlled market. We are positive again. They've got this Dow up above 8,300 for the time being, or right around there, and that's going to be very, very significant because remember, the market, the longer the government can keep the markets afloat, the more beneficial it is to consumer spending, the more beneficial it is to every facet of this economy getting back on the feet. So it's very much in the best interest of all these players out there to coordinate to make sure that positive news constantly flows. Now, the market will eventually see through that, and we'll have to see when that happens. But, just keep in mind, folks, you really want to just follow the charts, understand psychology. Psychology is a large portion of what I personally use to analyze the market and be so accurate, is understanding the shifts in psychology, really looking into it. Look outside of the box, grow outside of the box, and you can start to come up with these ideas, these kind of facets about why the market could float up. Is it Goldman Sachs buy program? Is it the government pushing the stress test off to keep volume light so they can keep it up? All these different things, very, very intricate in understanding. You add the charts into that, you will increase your percentage ratio of winners astronomically. All right, so continue to watch this pattern, folks. We'll see how it plays out. The light volume is the only thing that makes me cautious. Otherwise, I like this as a bearish pattern. But again, the light volume is just something that is just too tricky to categorize right now, as there's just nothing in this market right now floating up on nothing. Take care, folks. Come join the Research Center, the webinar, or the chat room. We hope to see you soon.